All right, and we are live. It is Fridays in Fintech. Welcome, welcome. We have a very exciting guest today. We have Anzar Dewani. Did I say it right?
Got it right, man. You got it right. One for
Awesome,
one.
awesome. And so today we're going to be diving into Anzar has a very interesting background, but really focusing on financial compliance, BSA compliance from fintechs, middleware, all the way to working at FIS and other credit unions. I'll give a little intro about you, but it's great to have you on here.
Oh, I'm excited to be here, man. Just been following you since you started this, so I wish you nothing but the luck, and I'm always here to come support.
Ah, that's so kind. Thank you. Yeah, but a little bit about our guest Anzar. Started in 2005, really at small credit unions, then worked at some of the largest banks, including MUFG and Goldman Sachs as well, which is pretty interesting. But what was really cool is, you really got to see Bond and that middleware, and then it got acquired by FIS, which was super interesting. So you got to see going from this middleware player all the way to acquisition to this huge behemoth, and you played a pivotal role in their compliance, financial crimes compliance, AML, BSA stuff. So now you're starting your own firm, ComplyTech Solutions, and offering compliance as a service, CAS. I love it.
Yep.
So you help fintechs, companies navigate regulatory landscapes by providing a comprehensive compliance solutions to support their growth and operational needs. But Anzar, it is great to have you here, man.
Man, good to be here. Good to be here, man. I'm excited for this journey. I'm about to go on. Compliance as a service is something that's needed in the industry.
Yeah, definitely. It's one of those things where as we go to a fragmented world, right? And what do fintechs need? Placing in and out, just making that more efficient. That's going to be much better.
Yeah, yeah. The regulatory pressure is so high, right? The regulatory pressure is so high, and they can make and break you. I mean, if you can have the best technology out there, but if the regulator shuts you down, then that's it, right? So we kind of
Yeah.
have to start taking compliance as a profitable oversight and say, okay, how do we use this to our advantage?
Yeah, we're just making it more efficient, right? It's like, hey, I have to bring on, as a bank, I have to bring on 3 more people or 5 more people because it's going to make the regular side is like, no, let's put in better processes, better oversight, better technology, make it more efficient. And then that's also going to help our customers, right? If we're really like treating the right ones correctly, and then also,
And
worrying about those bad ones as well.
yeah, yeah, makes sense. And that's the key to scaling, right? You got to make sure that your operational burdens are minimized because once you go from 20 customers to 200 customers to 2,000 to 2 million customers, if you don't take care of that operational debt that's building on because you're just trying to build, it only way to kind of tackle that is just getting people and just filling bodies and just a lot of investment in the future for something you can control right now.
Yeah, yeah, for sure. Well, before we get too deep into it, I really ask the hard questions, and especially since I'm in New York today, do you prefer pineapple on your pizza?
I lived in New York for about 10 years and I despise people that put pineapple on their pizza.
Wow, I think
Listen,
you're our strongest opinion yet.
listen, man. Growing up in New York, a local pizzeria was everything. We went in there, and I don't think ever for any local pizzeria that I went into growing up had a pineapple pizza sitting out there. You had your cheese, you had your pepperoni, you had the basic pies out
Dude, the pizza here is so good. But I was gonna ask, what would happen if you saw, what if were there secret spots of, hey, like someone eating the bag with pineapple on their pizza,
there.
like this
No, no, no. Listen,
under.
I'm exaggerating a little bit. I've had pineapple on the pizza. It's just one of those things where it's not a true pizza. A true slice of pizza is
Yeah.
something you can fold and just kind of enjoy. And you're in
You,
New York, man.
you hide that. You're like, I don't do that, but it's pretty good actually.
I'm not gonna hate on it, but it's just not the way, right? If you had a preference, you're not gonna eat the pineapple.
Yeah,
I don't know. I won't eat
yeah,
it.
that's cool. Thanks for sharing that.
Yeah, yeah.
So your journey started in 2005, 20 years ago. That's amazing. So you know your stuff. But really,
Yeah.
what drew you into this world? And what was kind of that first thing is like, oh wait, this is interesting, or
Yeah,
I can
I
provide
got
value there. Curious to hear your journey.
I got into banking right out of high school, and it was just a luck,
Wow.
like a co-op program. I didn't have enough because I had moved from New York to Texas. Long story short, I didn't have enough credits to graduate high school, but I had too many where I couldn't take any more classes. So I got put into this co-op program, started working
Mm,
at this credit union as like a teller, learning the,
mm,
money movement, learning compliance, and then I got recruited to become, join the risk team of that credit union. And since then, I've just been in the field, right? Sanction screening, KYC, TM, vendor management, and just throughout my journey with, even at MUFG, at Goldman, it was just variations of doing a little bit of everything, right? As opposed to getting siloed and
mm,
saying, hey, listen, I specialize in KYC. I specialize in EDD. I specialize in transaction monitoring. I always thought that compliance is a holistic approach, right? You can't
mm.
do transaction monitoring without understanding KYC. And if you say you're doing you're just not adding any benefit, right? The only way to kind of reduce the overhead, reduce the cost is to combine that data. The data you get from KYC to the data you're getting from the transactions, evaluating which is risky, which is not risky. How do you identify that? How do you mitigate that? How do you report that? How do you show your regulators you're doing all of this? Right? That's the biggest thing is like you may have these integrations put in, but if you're not able to speak to your regulators and say, hey, here's what we got going on, here's our risk, and that's all they want to see, right? They want to hear and say, okay, look, there's someone that's taking this information and doing something with it, as opposed to just saying, hey, we hit this API for KYC. It has to be more than that, right?
Right. I think that's kind of what we're getting into in the world of compliance now, where it's like, hey, we're doing these things. And then the other thing you were saying was, yeah, we now have to educate regulators of all our processes and our protocols. But now it's like, okay, what else can we do with this? And I think that leans a little bit more into product and customer satisfaction as well.
Yeah, yeah, and you have to, right? I mean, in the beginning, you're building early stage companies. You've known it, right? Right now it's just finding product market fit. That's all it is. Like, hey, it's my product, but at that same time, if you don't have compliance forefront of that product, the more successful that product becomes, the more tech that you're gonna have, right? To go back and rebuild your
Yeah.
product, to add the compliance controls is gonna be so much of a headache. So we go around advising early fintechs on how to kind of do their onboarding approach, what information will be valuable for them on the monitoring side, and how to kind of bring that into their system and utilize it to their advantage, right? We don't want fintechs getting thousands of customers who bring no value to their platform, right? Getting thousand
Mm.
signups is just thousand signups. We want to assist VCs and other investors to say, hey, this company is growing because the customer base is a profitable customer base, right? So we're trying to take it into a new lens, like compliance in a new lens to say, hey, listen, these guys are not just to check the box. We are going to utilize compliance to check the box, but plus gain the competitive advantage against our, competitors. So hopefully we're trying to do something to assist the fintech industry in general.
Interesting. That's cool, and especially with the margins being so thin and some of the revenue multiples going down, it's an interesting space to be in.
Yeah.
I was going to ask, is there anything that really surprised you working at a credit union versus going to Goldman Sachs? Maybe they should fix this at bigger institutions, or something that just completely surprised you.
No, no, no. This is my opinion, and again, take it how you will. But I think the problem with the bigger institutions is the problem that we're trying to solve with the fintechs right now. Right? They came into the product, they started scaling the product, and then these started worrying about these fines coming down the line on the compliance side. So started to plug in those controls. Right? And how do you plug in a control of a beast of a bank, right? JP Morgan can't say, hey, I'm going to gut out my whole core system and add this thing that's going to be compliant. So they're just having people come in, outsourcing. So what we're trying to say is fintech is going to be the next best thing. We want compliance with it because as these companies scale, as these company IPO, we want to make sure that the cost of keeping that business going can be reduced because that's where you start looking at, hey, the operational cost, how long does it take for someone to clear an alert? But the only way to kind of reduce that in the long run is to be able to utilize the data to your advantage.
Interesting. Curious, what drew you from traditional banking to going over to bond? What was that story?
So I was, after I left Goldman, I was a BSA officer at a crypto firm. They were MSB out of US, called AirTM.
Interesting.
Yeah, so that's where I kind of got started to the fintech world. Again, I believe they were a Series C company, so that was me going in from a big corporate eyes to this fintech who's like, wait, what do you mean you do it this way? What do you mean you do it this way? Right. So it took some time to kind of understand to say, hey, listen, there is no clear definition, there's no clear structure. So that's what I started specializing in, is to saying, okay, listen, these big much, right? You're not just writing a policy and kind of putting it out there. You're going to figure out, okay, procedurally, how do we execute this? Who's going to execute this? Okay, what happens once it's done? Like all of these little things where you're just like, hey, there's other 15 million people around to figure this out. It's just you.
Yeah.
So it's a great
You can't
experience
just
to
throw
have.
people on
You
it.
can't throw,
It's
because
like
you're
we don't.
building it, right?
Yeah.
So you're
Yeah.
building it at that point. So by throwing more people at it, you're just creating more tension, more friction, more views of looking at things. So you need to have that structure. So when you have to throw the people at it, it is pretty easy to throw it, as opposed to saying, hey, listen, we got 15 million spreadsheets you're gonna have to go in and out to kind of make do with this.
Yeah, that's funny. I'm curious, how do you find that balance? How do you even think about it? It's like, cool, all right, I had 50 people for this, but now it's mainly just me or maybe one other person, two other people at the earlier stage. And I guess that was a Series C fintech. So, how do you find that balance and how do you create those systems?
It was tough. I think being at AirTM, they're a great institution, but it was tough because I was coming from a big organization, right? So my mentality had to change a little bit, right? Compliance in
Mm,
big organization is you got to do it, you got to do it, you got to do it. There's that. I mean, there's no questions asked, right? But in the fintech,
hmm
you have to understand from the co-founder's perspective, right? They have to grow the business. They have to grow the product. There's other things that if it doesn't grow, there is no compliance. What are you complying with, right? If there's no product, right? So you have to learn to balance and say, hey, listen, as much as I would like a full KYC verification where this guy gives me his, photo, video, thumbprint, you have to start accepting to say, hey, listen, maybe that is not what's needed at this stage of the company, right? We're trying to bring these in. So we got to get some initiative to get these customers through the door, right? As these customers begin to use our product more, then the risk goes up. In that case, then we collect the ID, then we do the video verification. If you kind of hit them on that, the first thing you'll hear from all product is friction, 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 friction. I think friction is total opposite. If I'm giving my money, like my dad would say it, if I'm giving it to some online person, I want to make sure they know everything about me, that no one else is going to be able to kind of touch that money, right? A local bank, you were able to go to
hmm
your local bank, Mary, you were able to get your money out. Now the time is changing, right? So I'm okay with the friction, but I understand some people are not. But we want to change the perspective of that. Is like, hey, listen, there's different ways to kind of reach your target, teach your market, and kind of grow for the long term.
I mean, that's super fascinating, right? The development of consumer behavior and what they expect from financial institutions. I have a feeling crypto has a little bit to deal with it too, right? It's like, oh, I have my wallet, I can go in and out of any chain, I can buy
Yeah.
whatever, and it's like it's kind of crazy.
Yep.
And so, how do you see that evolving, right? With fintech, say less friction, but do you see any kind of new systems, new types of consumer behaviors of how they're going to be interacting with fintechs and that balance of like, we'll give you this much functionality versus like more risk. I'm curious to hear your thoughts on that.
Yeah, and I think as the companies grow, they begin to realize, and most of it's due to regulatory pressure, right? Whether it's their sponsor banks
Mm,
or the regulators
yep.
coming down and saying, okay, listen, you were okay with 50 customers. Now you've grown to 5,000 customers. Now we need to double click on some of these things. And that's where we start
Mm,
seeing, okay, well, now we have to add this for onboarding, or now this is what we need to add for transaction monitoring. So it's a balance. I think the regulators are going to keep pushing because they're going to keep wanting to get this perfectionist compliance program, which is their job, and the fintechs are just going to have to kind of keep giving them that assurance that, hey, listen, we're on top of it. we understand compliance is going to be a part of this product, and we've come to accept it, and we're going to move forward with it. I think until that confidence is given in the industry, the regulators are just, you're going to see these fines coming out like you've been seeing, third party risk management, AML violations, this, that, or the other. But again, it's one of these things on how you view compliance. Either you view it as a check the box tool, or as something to say, hey, you know what, we're going to be the first fintech out there that's going to publicize ourselves as compliant. Like that is what we focus on, because that's going to happen there as the regulator pressure is going to come off. You're going to be able to expand. Customers are going to feel comfortable. So it's a long-term approach, but I think we're seeing the shift coming.
And especially with all these fines coming down, and then partner base feeling that pressure, which leads to pressure on the fintechs. And I feel like there's a shift coming, right? And with how compliance is managed, and also the role of the compliance officer, how compliance management is run within a fintech and through the embedded finance chain. How do you see that shifting and the focus that person needs to focus on? How do you see that changing?
In my mind, the sponsor banks in a BaaS model, right? The sponsor banks will be ultimately responsible, right? Because these regulators will go to them. So in that case, they need to make a decision to say, hey, are we going to provide the compliance service, or are we going to rely on these fintechs to do it? And if so, what oversight are we going to have? Because the regulators don't care to say, hey, I got a fintech doing compliance if you can't speak to it, right? But if a sponsor bank says, hey, listen, here's the sanctions, screening algorithm that we use. Here's the transaction monitoring we use. Here's the thresholds we have for all our fintechs. And they do the first level of clearing and we do de-escalations. Like having that conversation with the regulator is so much easier and better digestible than saying, oh yeah, we have outsourced compliance to that fintech. Oh, what did they do? Oh, they hit an API for KYC. I mean, regulators don't want to hear that. They want to hear exactly what is happening. What kind of oversight do you have? You're giving your license out. Are you kind of sure that this fintech is doing what they need to? So there needs to be a way to show that to them. And I think the sponsor banks are coming around.
It's kind of funny. It's like, how can you educate me to just have full confidence in you, and then also teach me some stuff along the way that's easy enough for me to understand, right?
Yeah. That's where the third-party risk management is coming in, right? That's why you're seeing these fines for third-party risk management. It's like, hey, we're saying this person is doing it, but what are they actually doing? Like, if you truly ask some of the founders in the fintechs and say, hey, what is KYC? I don't think they can tell you the true meaning of KYC, right? CIO, we collect your name, your social, your date of birth. But there's more to that. There's the ongoing due diligence. There's the enhanced due diligence. All these things that happen in the back end of your operational folks that cause that operational burden is kind of what we want to make sure that we start tackling now. So when these organizations begin to scale, it's just a matter of, hey, listen, we thought about this. We knew this was going to happen, and our infrastructure allows us to grow in that manner.
So fascinating.
Yeah. It's fun, man. I would have, always been a corporate guy. I never thought I would be a founder. But, at some point, I was just, the passion just wouldn't, the itch wouldn't go away. So I was like, unless I do it, unless I get out there and try to build this tech and this compliance as a service, it's just, I'm never going to be happy anywhere.
It's one of those things where, we may cut off for a second. It's one of those things where it's like, hey, this is a passion, this is a purpose, and so you can provide a ton of value to people. Yeah. This is their livelihood, and you can just help them do that.
Yeah,
because you get a lot of founders coming in, a lot of fintechs, like they have no idea. I'm like, where do we even start? How do we even think about these problems? How much do we even invest in these problems? And if you could just almost like a therapist, right? Come in like, hey, let's think about these problems like this. Let's think about the risk like this. Let's think about all our relationships in our ecosystem like this, and it's super helpful. It's almost, I view compliance like legal in a sense. But,
and you're just adding structure. And again, you don't blame the founders, right? Because as a founder, your job is just to promote your company. You cannot worry about every aspect of it. But if you're a financial company, if you're a founder in the fintech, I do encourage you to kind of talk to your BSA officers. They have a lot of knowledge. They know what is the best way to kind of maybe get an ACH conducted, what data points are needed to be able to kind
Hmm.
of deal with all the back end that may come with it, whether it's fraud, whether it's compliance, whatever it is, right? If the data is there, if the data is pure, you can do a lot with it.
Yeah. I'm curious, what are some of the biggest problems you're seeing that these early stage fintechs are facing? What's
It,
really top of mind for them?
yeah, and again, it's I wouldn't say problems, right? It's a challenge to say, okay, listen, we have X pool of budget. Where do we want to invest that, right? If I was the founder, I would be, yeah, it's not going to compliance because again, we need to build our product first before it can go to compliance, right? So I think the lack of having the resources in a big institution, onboarding 50 analysts is nothing, right? Because the volume is there, the funds are there, you just go ahead and do it. Bringing on one hire or bringing on a key vendor at a fintech is a huge decision. It's not only the decision of like, okay, how much is this costing us? How long will this take away from our engineers to actually focus on this as opposed to build our own product? Is there the value there? And no one sees the value right now, right? Because you barely have 5, 6 customers. You're just trying to get off the ground. But the value is a prolonged value that will help if you kind of invest in it right now. So there's a ways to do it,
Mm.
and us compliance folks have to be like you said, the therapist to these founders to say, hey, listen, we don't need the monster machine that's going to do all of this. Based on what you're trying to accomplish, let's start here. Let's start here.
Yeah.
Let's do this and then do that, right? Straight is like, okay, first it's just, what is our policy going to be? How are we going to handle PEPs? Okay, we do not want to do business with PEPs. Great. Then you can go ahead and build out the processes and procedures around that. So it's very good to understand the business before you go in and say, hey, listen, we're gonna be your tool for AML. Everyone's risk appetite is different, geography is different, product is different.
That's interesting. It kind of cut out for a
Yeah, I
sec,
see that.
but it seems like, yeah. It's interesting. It's kind of almost you're a financial planner as well, just really setting it up. Okay, based off the stage you're at, what can we plan for? What's going to be most important? And really, I think I talked this on a couple of past episodes is understanding compliance debt and risk debt and really monitoring that out, right? Much like tech debt.
Yep.
It's like, hey guys, for now, we got to do these things, or let's not think about these things. This is what's important because, like you said before, the fintech is balancing. We need to survive. We need to grow. We need to grow fast. And like we have to worry about these things, but how should we think about it? How much weight should we push onto it? So
Yeah.
it's a very important position to be in for that,
Yeah, and
especially
that's
when
why
founders are freaking out with their hair on fire.
it's helping the operational folks, right? These are the people that are actually kind of making sure that the wheels are in motion every
Hmm.
single day at your fintech, right? The ones that are making sure that the customer
Hmm.
is getting responded to in a timely manner. You're making sure this is happening. All this operation efficiency that needs to be built into the technology. The goal is for these fintechs to grow their product, and we can help with that, right? We can kind of come in and assist them in their compliance needs, both from a tech, both from a product understanding, so they can focus on what they do best, right? Is to move this money around and kind of deliver technology that's going to help the greater good.
I'm curious, what do you think is going to really happen with fintech and embedded finance in the future? Where is that going?
I think the regulatory pressure is going to increase so much where the only way for them to survive is going to either somehow get their own licensing or to have so much scrutiny to be able to show their sponsor banks or regulators that, hey, listen, we have a control on this. I think that's where it's going to. I don't think the industry will lose the momentum. I know there's been some news that's going around, with the bass and this and that, but I think it's there. I think there is huge potential out there. I think, they just need to kind of keep focusing on building it the right way as opposed to being the first one to build it.
Hmm.
Yeah.
Interesting. Interesting. Well, any closing thoughts for, fintech founders or people who are building out their team that really, they should contact you as well, but anything that should be top of mind that really need to think about as regulations come down harder, as there's more scrutiny.
You kind of missed out a little bit there. I just caught it. You have any recommendations for fintech founders? And then I think you froze out.
Closing thoughts for founders.
Oh,
Yeah, yeah,
Listen, I
yeah.
myself as a first-time founder, I'm in this journey myself, right? So I'm learning for other founders, but one of the things that I've seen is just as much as you're getting pressure to rush, take a second and slow down. If the ultimate goal is the company to succeed, right? Like if it's a very short term, like, hey, we just want to get this out, then yes. But if your goal is to say, hey, listen, I want to get this company, I truly believe in the product that I'm offering, and truly believe in the value, take a second. You don't need to be the first one to finish. Like I said, you should be the last one standing, right? And that's what I kind of keep
I
looking
like
at it
that.
as, right? As a founder, I'm coming in 1 month into my journey, and I was like, what am I doing, man? I used to get a paycheck every 2 weeks. Like now what am? But I got to understand, right? It's for the long term. It's not for the short term of like, hey, this is what we need to do. It's how do you want to build this company, and where do you kind of want to see it? So what investments are the right investments at the stage? So hopefully,
Got it.
we
Yeah.
get to kind of help others out.
Yeah, that's funny. So, well, we're at the end of Fridays in FinTech. Anzar, it's been great having you. And what we like to do is, we really appreciate you coming out here. We love closed loop systems, right? No KYC required. And what I mean by that is we like to give out gift cards to random chain restaurants. And today on the chain, we have what location or what state are you calling in from? Texas? Oh
Jake,
man,
you
this Wi-Fi is not great here where I'm at.
yeah, yes. I'm losing you, man. I'm losing you. You're saying
I'm
some good
cutting in and
stuff, but I
out.
got
You're
it.
cutting in and out.
Yeah.
Well, well, random Midwestern restaurant gift card, closed loop systems. And I'm gonna spin the wheel. You're in Texas. You're gonna get a gift card to Whataburger.
All right.
The
Whataburger.
classic
Yep,
Texas hamburger shop, man. I know
yep.
with California, you got the In and Out. So,
Oh
but
man,
really good
Whataburger.
stuff. Yeah,
Hey,
really good stuff. Appreciate you having on here. Hopefully, I think the stream went. I think it should be good. But yeah, yeah. What are you saying?
yeah. No, man. Thanks for having me, and we look forward to having more of these and kind of just seeing you dominate this space, man.
I think we both will. Hopefully, this is going through. But Anzar, really great chatting. Have a great rest of your weekend.